Alright, so time for a quick recording on exactly what to do with your pension once you turn 50 if you're based in Ireland. So it will be a specific video, not super relevant for the American audience here, but interesting just to listen in on the decision-making process nonetheless. I'm making this video right now because I just took a meeting with the pension advisor at the company, and I always ask this in new countries. I made a video specifically on pension, what questions to ask, but this question, explain the pension process and then for the country that you're based in. To just have a full explanation both on the social security side, but as well, more importantly, the private one when you're talking to the financial advisors on the pension side. So what I got explained to me specifically for Ireland in this case is that, alright, you have a few different selections that you can make once you turn 50. One of them is to trade in your pension amount for an annuity, and that sounds super complex, but what it basically means is that you get a guaranteed amount every year. You get a certain guarantee payout for as long as you live, and this will differ if it's some sort of inflation adjusting part of it. But if there's not, well, you're gonna get less purchase power in older years. That won't really be an issue since we spend less money the older we get, and we just consume less and less because we don't have the energy anymore. But it's also a very profitable product for the pension company, for the life insurance company, because if you all of a sudden die, well, then the money that's left, it just goes to them, and they calculate this in a way so that it's very likely to be profitable for the company selling it. And I also really understood that from the way that the advisor was really pitching it, really talking a lot about it, really focusing on it, presenting it as an excellent solution. But with education in business and economics and finance, and having worked at a private banking company myself in my younger days, done a lot of internship at banks, for example Citi in London, well, I know that, alright, this type of product is where the margins are at. It's a lot easier to just accept the offering like that, but be careful with that when you turn 50. It's gonna depend on your own personal situation. So when I listened in on that, I realized that, alright, this is gonna be a horrible choice for me. I will absolutely not do that. I have a lot of personal savings on my own, both a dividend portfolio here that I'm building up to 100k just to see how quickly I can do that again, made a YouTube challenge on it, and a multi-million kroner portfolio with growth stocks. So I'm not gonna get the safe, and I did air quotes for those who are listening, option here. That's just gonna be a way to make more money for them. The other option that I was presented was to make a selection on my own to different funds that will be able to you once you turn 50. You can make a change in the selection then, and that makes sense. In my case, I will do the strategy where I have a super high risk equity fund that I just selected with some emerging markets, some small cap, and then the rest just global equities. So super high risk, but that's what you do when you're around 30 and have 20 years to accumulate, just maxing out of course, the taxable deductible contribution part. So 15% when you're younger than 30, and then it goes up after that progressively. Anyways, so stay on topic, what to do once you're 50. Well, you can select your special type of funds, and you can make 20% withdrawal straight up cash free in Ireland. So you just take that lump sum and you cash in. Congratulations, you hit that retirement. Go buy yourself a boat or a car, or buy a Rolex for your grandson, or whatever, trip around the world. If you've done proper pension saving from young years and done those tax-free contributions with a match, well, then you're gonna be in an excellent situation. And what about the rest of the 80%, Andreas? Well, that will be taxed just like income. So you can make those withdrawals over time, and this is not going to be relevant for me to talk about now, like right now, because these brackets are going to shift with inflation. So if you watch this video 2 or 3 years from now, well, then the lawmakers might have changed it. But we have progressive tax here in Ireland, and right now, as I'm making this video, the top level is 40%. But you can withdraw, smaller amounts up to maybe maximum of 30, or whatever your financial situation might entail you to do. If you have more private savings, well, then you can do maybe a little bit smaller withdrawals, and it's more tax efficient, and do it over a little bit more of time. Also, depending on the size that you have, of course, you have to do some math, you have to do some strategizing. And maybe if you just want to live really big, maybe you smoked a lot and you don't feel too good, and like, all right, I gotta max out quickly, well, then you can make larger deductions and just take it out really fast and then spend it all on a nice car or something like that. It depends on situation, once again, but feeling nice and healthy, well, maybe you want to pace it out a bit slower, and then you can do on a tax bracket that you feel comfortable about. So those were the main 2 options with regards to what you can do when you turn 50. So really look into that, really think about your own strategy. I just had the meeting with the pension advisor just to have this presented to me, just to listen in on how does the rules work in Ireland. And once I hear the system, then I immediately think about how can I game the system in a way that's most beneficial to me. So of course I ask the questions, well, do Irish people move to, for example, Portugal and then just collect everything over 5 years tax-free? Well, no. They have stopped that loophole in Ireland. In other European countries, such as my home country in Sweden, a lot of people would do that and collect their full pensions. But these are questions that we have to ask, and the level of service will depend, of course, as always. Maybe you get some sort of big bulk bank provider in terms of the pension part, and they don't really do a lot of tax advisory. Well, you're not going to get great advice when you ask that question then, so no use. Then luckily you have YouTube, you can comment below on channels that talk about that specifically. There's a large wealth of knowledge, so if you turn 50 and you don't have that super good advice, you can also just talk to a local tax planner. I've seen plenty of offices around Dublin that specialize in tax planning, for RSUs, for example, since there's a lot of tech companies here. But not going to stray too away from topic here. We're looking at what to do when you turn 50. You have those options. Just really understand it, understand the system, understand that withdrawals are going to be taxed like income taxed in your younger years, and then plan accordingly, and you're going to be perfectly fine. That's it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.